Good morning, good morning, good morning. Welcome to today's morning blast for myself and Mr. Michael Brown. It is Tuesday, the 20th of May, all day. As usual, myself and Michael will be jumpstarting your trading day with a review of yesterday, a preview of today, and a look ahead for the remainder of the week. But before we do, I will get the legals out of the way. So as usual, nothing discussed on this space session constitutes trading or investment advice or infers any kind of endorsement by PIQ, myself, Brian Paisley, or that of Mr. Michael Brown. How are you, my dear friend?
Very good morning, Ryan. Good morning, everyone. Not too bad, mate. Not too bad. How are you this morning?
Sun is shining. I've got a coffee in front of me. I'm pretty good. I'm pretty good. The S&P didn't hit their downward circuit breakers like the usual talking heads were claiming. It's not the generational selling opportunity that some people were claiming.
Yeah, I was going to say the sky hasn't fallen in on us.
No.
Armageddon hasn't arrived. There's no plague of locusts in the city of London this morning. I can
Well,
confirm
no
that.
more than usual.
Well, yeah, exactly. Anyway, let's crack on because, as
Let's
Ryan
crack on.
rightly says, the hysteria and hyperbole over the
Good
US
word.
ratings downgrade by Moody's at the back end of Friday really faded relatively rapidly as yesterday progressed, and actually rightly so, as we discussed. During the call yesterday, we don't really need to go through all those arguments once again, but Moody's are catching up to something that S&P did 14 years ago and writing in their report a whole load of concerns that we already know about. There's not really anything new about what they said. So once we got over that initial bout of panic and jitters, then it was really plain sailing once more, at least in terms of the equity space. The S&P 500 and the Nasdaq 100 both closing in the green, pairing declines of well over 1% apiece on an intraday basis. We also saw treasuries end the day with very marginal gains across the curve as well, with the 30-year yield settling at 4.94%, which is pretty much where we ended the day on Friday, to be completely honest, before all of this Moody's nonsense. Although it must be said that we did see a little bit of a sell-off intraday with the 30-year Treasury briefly trading to its highest level since November of 2023 at 5.02% before those declines were paired. The dollar, though, ending the day marginally softer, but again off worst levels. The dollar index down by about 0.4% on the day, ending up at 100.5. Cable up by 0.5%, although rejecting a move north of 134. The euro also firmer to a similar magnitude, but again failing to break north of resistance around 113, and we are still capped by both of those levels in early trade this morning. In terms of catalysts, as the new trading week got underway, to be completely honest, they were relatively light. Besides the Moody's downgrade that everyone was obviously reacting to, data flow was incredibly barren. In fact, there were no notable releases yesterday through either the European or the North American trading sessions. On the trade front, we did have a few bits and bobs, although it must be said again that the speed and volume of news flow on the tariff front has slowed quite significantly, despite White House economic advisor, NEC director Kevin Hassett, having said that he would not be surprised if trade deals were signed this week. Well, he said that for the last 4 weeks in a row, so he's going to end up being surprised at some point, I'm
I'm
sure.
not going to drink this week. That's the vibe I'm getting.
Yeah, absolutely. And then
In our parlance.
he's back on the wagon by Tuesday lunchtime, probably.
Yeah, right.
Not that I'm speaking from personal experience on that one. You will understand.
God bless.
No, I'm not drinking this week, mate.
What?
No,
I see
that
what
is
you
a
did there. Yeah,
joke.
yeah, yeah, good one.
Before anyone sends around the men in white coats to come and have a word with me, that is a joke. We did have, though, some reporting via sources cited by Fox Business that the trade agreement between the US and Japan is still being delayed. Apparently, this time the Japanese are in disagreement with the United States over how much money they are going to need to pony up to support the US military presence within the country. There were also reports yesterday via Reuters sources casting doubt on the idea that any trade deals would be announced at the various G7 meetings that are going on this week. Not really a venue for that sort of announcement anyway, to be completely honest. So somewhat stating the obvious there.
Just on US Japan, we are seeing that they're going to hold talks on Friday, but Besant isn't expected to attend, so we could see some headlines towards the end of the week on that.
We could, although if Besant isn't going, then I'd argue what's the bloody point of the talks? But never mind.
Well, yeah,
We'll
with
leave
that.
that for another day, I suppose. We did also hear some murmurings out of China yesterday. Of course, you'll recall that last week the US adjusted a whole host of chip export measures, basically tearing up the rules that Biden had put in place. Now,
Yeah,
these rules were designed to essentially put every country in the world into one of three tiers, and the tier they were in would determine how many chips and what type of chips they could get from the United States. The reason that they tore this up was because it was going to force the countries in those lower tiers to go and buy their chips from China, basically, because they wouldn't be able to get what they needed from the United States. Well, unsurprisingly, the Chinese are not particularly happy about that. They said that
no,
what the US have done there undermines the consensus that they reached in trade talks in Geneva, and China have vowed to take measures if the US insists on going its own way. Very familiar rhetoric from the Chinese, but nonetheless, I guess it is just at the margin the first time we have seen things heat up a little bit between the two
yeah.
sides
Do you know what?
since
Funny you
the
should,
truce was agreed a fortnight ago.
funny you should say that. I was only saying to someone yesterday that not just this, there's been other some, just back and forths, via sources and stuff that we're starting to get kind of fiery language again. Well, maybe not fiery, but kind of it's kind of starting to heat up a little bit again. So
Mm.
we know what the Trump administration's like. It wouldn't take much for what has been agreed just being ripped up. Bearing in mind it is only air quotes broad framework at the moment. So yeah, one to watch. As we have said from the get-go, it wasn't going to be linear. We were going to see like ups and downs on this, but yeah, potentially we could be looking for one of those dips in kind of sentiment between the two. So one to keep an eye on, definitely.
Yes, definitely. A few other things
But
from.
sorry, just a caveat,
Oh,
that doesn't mean I'm saying sell the S&P.
oh no, absolutely not. I mean, just get a grip for God's sake.
Yeah,
A few other things from yesterday. We heard from plenty of Fed speakers. To be completely honest with you, none of them adding too much to the overall narrative. The FOMC still firmly in wait and see mode. Of course, if anyone from the FOMC says anything different, then it will be newsworthy. But all the time they're not, then these speeches are rendered somewhat pointless because they're just reeling off the same old script. Here in the UK, we have reporting via the FT yesterday that the Bank of England are reportedly looking at ways to loosen some of the ring fencing rules for UK banks. For those who are unaware, this was brought in after the GFC, basically to separate the consumer deposit taking side of UK banking from the corporate and investment side of UK banking, and to basically try and reassure the public that banks are safe. It does, though, mean that banking within the UK is quite capital intensive, which is one of the reasons why we see, for example, Santander looking to get rid of their
can't
UK
give it
arm.
away.
Although, well, I was going to say they seem to be getting some decent offers for it, but don't want to accept them for whatever reason. So that is one of the reasons why. Basically, the regulator is looking at two things here. The first is the rules that prevent banks from doing certain activities inside the ring fence. So basically saying you can bring some things inside the supposedly safer part of the bank. And the other is how back offices are structured. Now, to the best of my knowledge, back office functions are separate between the ring fenced and non ring fenced part of the bank. I would imagine that a very easy way to improve efficiency would be to say, okay, fine,
Yeah,
keep things separate, but have a shared middle and back office, which would
yeah.
obviously reduce the
I
capital quite a lot.
I think you're right there. Like I said, I'm definitely no expert on this, but for some reason I've just set my Alexa off. But ignore that. Yeah. So like since the GFC, banks haven't been able to actively trade with kind of
Mm.
customer money and stuff like that, which is where I do believe the separate kind of entities of back offices and stuff kind of appeared. But yeah, it's one to keep an eye on. It was done for the right reasons. They wanted kind of account segregation and whatnot. But yeah, it has hindered the UK banking environment somewhat.
Yes, very much so. It does seem like they've sort of
Do
handicapped
you know what? It's
themselves with
crying
that
out.
one.
It's crying out for a Conks infographic. Hi, Conks. I can see you're
Oh, he's here. Good
listening.
morning.
Good morning, Conks.
I
Good
thought
morning.
this is usually
He
the
did
sort of time he goes to
a
bed rather
very
than
good
wakes up.
note. All of his notes are incredibly good, but there's a very good note that I read. Well, glanced through this morning. Me being me, I look at the images more than the words, but that's just because I like. That's basically all I can manage.
Well, I struggle to understand the images, so you're one step ahead of me,
I
to
just
be
like the
fair.
colours.
And lastly, from me this morning, overnight, we have had a policy decision out of Australia. The RBA delivering a 25 basis point cut, bang in line with expectations, lowering the cash rate to 3.85%. Governor Bullock did note in her post-meeting press conference that the board discussed either a 25 or a 50 basis point cut today, so a little bit more dovish than what we heard last time out. Also, the policy guidance was a touch more dovish as well, with the RBA noting that risks around inflation have become more balanced, and also that the outlook remains uncertain, rather stating the obvious with that one. They also noted that the policy stance will now be, and I quote, somewhat less restrictive as a result of the rate cut that's been delivered today. Aussie swaps priced in another 25 basis point cut by August, and we have seen some very marginal weakness in the Aussie dollar throughout the Asian session. Although, to be completely honest with you, the move from just before the RBA decision to where spot currently trades now is only to the tune of about 15 pips. So it's not exactly groundbreaking volatility that we see down under, but nonetheless, the Aussie just a touch softer after that RBA announcement. And that is pretty much all from me for the moment.
Thank you very much, my dear friend. So let's read out some choice headlines from the overnight news roundup, which, as everyone should know by now, is curated by the wonderful Zach, and you must be subscribing to it on Substack. It's the best place, basically, the best place in the world ever, best ever, as Trump would say. Biggest, the best way to catch up with news headlines that you might have missed overnight. Started off in trade. As I mentioned just now, US and Canada to hold trade talks on Friday, but Treasury Secretary Bessent is not expected to attend so far. That's according to the Kyodo news agency. Japan's Finance Minister Kato emphasizes shared US view on avoiding excess currency volatility. Sticking with Japan, Japan's trade negotiator Akazawa demands full elimination of US tariffs in talks. US Treasury rules out trade deal announcements at the G7, rejects communique unless it serves US interests. So for anyone looking for any deals to be struck during the G7, it doesn't look like you're in luck. The Port of LA is heading for, it sees no impact to import surge. So I'll start that again. So this is
I was
worded
going to
very
say,
poorly.
you've totally
Yeah,
lost
sorry,
me with that, Ryan. I don't know where
yeah,
you're
no, do
going
you know
there.
what? There's two headlines like back to back, and they're kind of saying different things. Port of LA head sees no import surge despite US tariff truce lowering duties to 30%. This is a bit of an odd one because we have seen lots of headlines saying that there's been shipping costs and rates spiked as there was a load of demand, but according to the Port of LA, they're seeing no import surge. Speaking of the LA port, shipments drop 30% in early May due to the tariff restrictions deterring trade. So it seems be interesting to see where we go from here. General Motors, they've halted vehicle exports to China from US amid tariff pressure. Moving over to India, they're eyeing interim US trade deal by July to avoid Trump's reciprocal tariffs. Interesting one on this because obviously we were told it was going to be like another 90-day kind of relief, but now we're hearing that the Trump administration might be about to write letters to the countries that haven't bothered to even kind of start talking to the US yet and say, look, hang on, you've not even pulled your finger out. You're now going to be labored with or lumbered, sorry, with X%. So I think there's a few moving parts here to keep an eye on. China, their courts European business leaders to counter Trump tariff threats. I think we've seen a bit more of this with Europe and China pallying up. Macro news, Trump to join tax bill debate as House GOP struggles to unify for crucial vote.
That'll solve it.
Well, yeah, exactly. House GOP leaders urge Trump to curb hardliners, demands deepening Medicare cuts, Medicaid cuts. U.S. Senate advances stablecoin legislation after Democrats drop opposition. This one I'm sure Cam will be talking about later on in the crypto blast. The BIS, Bank of International Settlements, warn of potential dollar scramble in a 113 trillion with a T FX swap market amid US volatility. The fact that they're warning about it probably means that there's nothing going on.
I was going to say they're about 6 weeks late on that one, aren't they? For God's
yeah,
sake?
I was going to say their hit rate is worse than Moody's, to be honest. Bank of Japan to gauge market views on quantitative tightening pace this week.
Oh, they already have.
China, well, I don't know why this is hitting me from Bloomberg this morning, so I don't know what's going on there. Was that last night? What happened there?
Oh, well, I don't know. I saw some headlines earlier on saying that the BOJ had released the results of this survey that you mentioned, and
Oh,
apparently, well, according to Bloomberg Newswires, who also ran this, so someone's had a bit of a mare somewhere, probably us. But according to the respondents of this panel that they've conducted, some market participants are seeking smaller cuts to the BOJ's bond buying plan, and some are seeking larger cuts to the BOJ's bond buying plan. So it seems like there's absolutely no bloody consensus whatsoever as to what they want to
well,
happen with
maybe.
that.
Well, in that case, maybe they still need to gauge market views.
Well,
There
mate,
you go.
yeah, we,
There you
we
go.
we didn't like the results of the first survey, so we're going to do it
Oh, hang
again.
on. Hang on. Judith Chalmers, aka Zach, has
Oh, here
just
he
messaged.
is.
I wondered where he'd be when he'd be typing in. They are having meetings today and tomorrow. So we'll give Zach the technicality on this one. Yeah. Okay. Right. Right. Moving on. China's PBOC cuts lending rates by 10 basis points to stimulate demand. 1 year LPR is now at 3%. China's Xi pushes for self-reliant manufacturing and mastery of core technologies. Hong Kong, their interbank borrowing costs slump after Forex intervention, boosting bearish bets. Obviously, we know about the RBA. They cut rates by 25 basis points, warns of 6% unemployment if higher tariff scenario. Geopolitics. Taiwan's president is planning sovereign wealth fund to counter China's isolation efforts. Um, sticking with Taiwan's president, he's calling for peace with China, but stresses need to bolster Taiwan's defenses. In equity news, Coinbase faces DOJ probe over recent cryptocurrency exchange breach. Pfizer licenses China's free S bio cancer treatment for 1.25 billion with potential for 4.8 billion more. Subaru raises US model prices to offset Trump tariff driven cost increases. Everyone's favorite battery manufacturer, CATL, their Hong Kong debut soars, marking 2025's largest listing in Asia. Xiaomi begins mass production of self-developed X-Ring O1 mobile chip. That's one for Tom's Talks Cars. If he's listening, I have no idea what any of that means. Kathy
Nor do
Wood,
I.
Kathy Wood in quotes the rock star stock picker, as financial media loved to call her a while back. Ugh, makes me vomit. Um, her funds might make largest TSMC share purchase in nearly a year. It's probably bearish for TSMC. I'm joking. I'm not joking. Foxconn's NVIDIA AI center to be built in phases with a 100 megawatt power target. Honda scales back EV investment, focuses on hybrids amid slowing demand. We're seeing more and more of that kind of headline. Nintendo are partnering with Samsung for Switch 2 chips to boost production. And finally, for me, Equinor resumes New York offshore wind product after Trump lifts stop work order. It's a bit of wind in their sails.
Oh, yeah.
Oh, sorry.
I knew there was something coming there because there's no other reason why you would mention bloody Equinor, for God's sake.
But to be honest, even if I get to the end of my list and I forgot to add one for puns, I scramble for a pun for the last one, and that's why sometimes the standards are slipping. I'm not going to lie. But
Oh,
that's it for
dear.
me. Back to you in the studio.
Good stuff. Thank you, Ryan. Well, in terms of today, then, the data docket is, well, quite empty once more, to be completely honest with
Yeah,
you.
I was waiting. I wondered how you were going to glam this up because I
Yeah,
looked at
do
it
you
just
know
now. I'm
what?
like, oh,
I'm not, because there's bugger all on it of any interest. There are
God.
two data releases today. The first is at 1:30 this afternoon, London time, 8:30 on the east coast of the US. We have the April CPI data due out of Canada. The CPI that is expected at 1.6% down for a prior 2.3%. Money markets pricing around a 2 in 3 chance of a 25 basis point cut from the Bank of Canada at their next meeting, which is coming up on the 4th of June. And then at 3 o'clock this afternoon here in London, we have the latest consumer confidence data out of the Eurozone. This is preliminary data for May. The index expected at -16 from a prior -16.7. I actually ran the numbers on this, and per Bloomberg data, going back to 1990 odd, this index has never been above zero. So what a miserable bunch they are over on the other side of the channel. We do have plenty of central bank speakers on the docket today, including the Fed's Kugler, Musalem, Collins, Barkin, and Bostic. Bostic, also the ECB's Wunsch, Knott and Cipollone, as well as the BOE's chief economist Hugh Pill, who speaks in 10 minutes' time. And lastly, on the earnings front, we hear before the market open from Home Depot. Of course, that comes after Walmart's warning about tariffs last week. We'll see what Home Depot have to say on that front. And also Ryan and I's favourite company, Pony AI. They report before the market
Yes.
open as well. Let's hope the company name doesn't sum up the tone of the results. And then after the market close,
What? Like, I'm dearly tempted just to have a little token kind of investment in Pony AI.
yeah, I'm
Just,
tempted to just have a punt.
you know,
just,
just because they are our favorite AI company.
and
Long-time listeners know what we're talking about, but yeah.
and after the market close, we hear from Palo Alto Networks, and of course, focus also on any potential trade and geopolitical developments as well. But for the time being, that is your lot from me.
Wonderful. Michael, thank you so much. Listeners, thank you so much for tuning in. As always, myself and Michael really do appreciate you, especially our regular ones. You have got a special place in our hearts. Whatever you're doing today, try and keep it tight, stay out of trouble. Remember to factor in the fuckery, not
Oh
fuckery in the
dear.
factor. That would go completely wrong. Have a great day, and we'll see you all tomorrow. Goodbye.
Bye bye.